Good morning from our global headquarters in New York. I'm Manus Cranny with Denny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Iranian President Ibrahim Raisi and other officials die in a helicopter crash. Intelligence agencies tell the U.S. there is no sign of foul play. Copper roars and gold soars. The metals hit record highs amid a haven demand and a short squeeze. And it is another busy week for investors, a marathon of Fed speak and NVIDIA results as the earnings season winds down. Good morning, Manus.
Danny, a very good morning. Yeah, we're counting down the NVIDIA results. That'll be on Wednesday. The market's already positioned with options trades for plus or minus 8%. So NVIDIA could be the bid that you need to take us through. 14 of the 20 major stock markets are making record highs. Mike Wilson has finally capitulated. There's going to be a sunny macro environment. We'll talk about more on that in a moment. He's gone from 4,500 to 5,400 on his target. There's clarity on the disinflation. We've got a little bit of green here. We've put on $12 trillion in value since the October low. So you are looking at 53% of that rally on 5 stocks. That's what you call concentrated risk. 10-year government bonds are flat at the moment. 442 is where we are. Globally, we're on for the best month of 2024 on 10-year paper. Bank of America say anything but bonds. That narrative will fade. That's more so on the investment grade. Look at a decade high on the JGBs. We'll talk to Derek Halpenny in just a moment. 10-year high. Swaps are saying 57% probability of a hike in July. So we've got to work it out in terms of what are the next steps to calibrate for dollar yen. Danny, good morning.
Good morning, Manus. Just to linger on this idea of Mike Wilson finally capitulating. I mean, the man has been bearish for so long, so I think we need to stop and take stock of this. As you say, they're talking about the macro environment. A clearer path of disinflation growth and policy over the next few months sets up a constructive outlook across the market. I think there's also this idea that it's getting harder to fight the momentum. Brian Belsky of BMO also upgraded to 5,600 too. That is a street high. The same idea. You can't fight the market momentum. But, Manus, to some degree, the data is confusing. So a clear path, but on the other hand, Mike Wilson also says that the data has been uneven. So there's still some hesitancy. It's a hold your nose and buy kind of market.
Yeah, but if you look at volatility, again, the momentum has been, we need to debate whether you go beyond those 5 stocks that delivered 53% of the $12 trillion rally. VIX is at the lowest since 2019. And that sort of says we've had a number of people come on and say, buy volatility. It is so repressed. It is something there. But you've got the animal stocks and meme stocks. You've got a real momentum. I mean, plus or minus 8% on NVIDIA. I mean, that's what you call a swing day for the voters out there. Get the pump?
Yeah, but it hasn't just been tech that's leading this last leg higher, Manus. It's things like utilities. It's also things like healthcare. Small caps also had a good week.
Utilities. You did your MR, you did your GRR.
Well, but part of the utility story is also weirdly a tech story. People saying that AI is doing well there. So it is a broad base. But again, how much of it is just AI excitement? And Manus, in all of it, we also saw the dollar too. It had a steady drop post-CPI. Derek Halpenny of MUFG writing the following: the U.S. dollar is close to a turning point. We are forecasting 4% depreciation of the dollar, and recent price action has increased our conviction in our call. Derek Halpenny joins us now. Derek, thanks so much for being on with us this morning. Good morning to you. Okay, so you say the price action is supportive. What else gives you conviction on the dollar easing?
Well, I think the narrative has started to change again, because it wasn't so long ago when there was this kind of anticipation of a big divergence trade. And really, you know, we've been lacking divergence. It's incredible to think that since the beginning of 2023, 90% of the time, euro dollar has traded between 105 and 110. So that's pretty incredible. And I think, having been in this kind of US yields higher for longer, divergence is coming, the ECB are going to be cutting rates, we've shifted back again. And as you said, the dollar has lost that upward momentum, and we've reversed on the back of that. And what gives me more conviction is the story globally, and in particular in Europe. And it's one of the reasons why we think the dollar is going to struggle to strengthen on a sustained basis, because we're through the inflation shock by and large in Europe. And we're now seeing the positive consequences of that in terms of better data. We're not booming, of course, but it's a lot better than where we've been over the last 18 months on a macro basis in Europe. And that's certainly supportive for the likes of the euro and the pound.
Derek, good morning to you. So if the supremacy of rates, of rate differential, and if the supremacy of exceptionalism, US growth exceptionalism, perhaps are going to be challenged. How does that reverberate? So we dispense with the parity calls then. We'll have Jane Foley later on, so we'll put what you say to her. But so that parity call goes for euro dollar. But what does that do to those other higher beta currencies?
Well, I think for the higher beta currencies, again, you've got to go back to what's the global growth view here. And of course, one of the key consequences of falling inflation in the US, if, again, we're at a turning point after the more favorable CPI that we had last week, if that is the case, it raises considerably the prospects of cuts and therefore a soft landing in the US. And if we raise the prospects of a soft landing in the US, then the global backdrop is a lot better, especially in Europe now with the inflation shock over and picking up, and indeed China putting the foot down and implementing more stimulus. So the higher beta currencies, in circumstances of Fed cuts and a reasonable global growth backdrop, should be very positive for the likes of Aussie, CAD. Those kind of higher beta currencies should do better.
Derek, how many cuts do we actually need to see that? Because at the moment, the market fully pricing in 2 cuts. That has gone back and forth. There's some volatility of the data. How many do you need to see, not even just this year, but next year, to have that story play out? Is just 1 cut enough, for example?
No. We expect 3 cuts from the Fed this year, so we're certainly expecting a lot more than what's priced in at the moment. So that definitely gives us the impetus for a bigger move to the downside in rates in the US, and is of course an important part of that view on the dollar later in the year, and then again into next year. So you either have a view that inflation is going to be problematic on a sustained basis and we don't get very much, and therefore that's a lot more challenging for global growth, or your view is that we can actually go back towards inflation targets generally across the advanced economies, and a lot of the inflation problems that we had were specific to supply side factors that have subsided. And I would be more in that camp, certainly over an 18-month, 2-year time horizon. If you go 5, 10 years, the structural issues that everybody speaks about in terms of the greening of the global economy, supply chain fracturing, yeah, those are inflationary, but I think the cyclical forces are more powerful over certainly the next couple of years.
You haven't been in the local coffee shop that I've been into then lately, Derek, to sort of understand the concept of inflation, 25% higher in the space of a week. But I leave that thought with you. That's called price gouging. Let's talk about the Bank of Japan. We're making 10-year highs on JGBs this morning. The debate will be the efficacy of the jawboning and the theoretical intervention that we've seen. The market says a hike in July, 57% probability of a hike in July. Is a hike enough to put a floor in yen, or is there going to need for more aggressive action from the Bank of Japan?
Yeah, good question. In terms of a floor, it could certainly have an impact on that. Of course, it's not just we're expecting 15 basis points in July, but with the communication that makes the market think that there could be another hike before the end of the year, and that possibly we get up to a range of 40 to 50 basis points around the turn of the year. In those circumstances, even ignoring the Fed for a moment, I think that will certainly help to curtail the selling of the yen. The risks would still be there because, of course, the big player in the divergence, from a relative change perspective, is always going to be the Fed. That's obvious. But I think certainly a more hawkish BOJ, and I think the markets are underpriced for what's coming. And we've had some very important communication changes from Governor Ueda after his meeting with Prime Minister Kishida the week before last. He gave a very hawkish speech in Tokyo on Wednesday the 8th. And I think that's indicative of a bit of a shift from the BOJ, a bit more focus on FX, but seeing the backdrop anyway that justifies a more hawkish, more active BOJ going forward. And as I said, the market's kind of missing some of that, I think.
OK, well, let's see what comes comes down the pike for us. Derek, thank you so much for joining us this morning. Setting the agenda, Derek Halpenny there of MUFG. And don't miss our exclusive interview with the Atlanta Fed Financial Markets Conference later today with Bloomberg's Mike McKee and the Atlanta Fed President, Raphael Bostic, at 7:30 a.m. Eastern. And the Cleveland Fed President, Loretta Mester, she comes at 2 p.m. So, Dan, it's going to be interesting to see what they've got to say.
Yeah.
Other top stories on the terminal this morning. This is what we got for you. Activist investor Elliott Investment Management is said to have built a large position in lagging industrial giant Johnson Controls. Now, the hedge fund's position is worth more than $1 billion, putting it in the top 10 investor slot. Elliott's intentions for the stake couldn't immediately be learned. Several of the recent investments that they've made have led to major C-suite changes.
Shares in Keystone Studios rose the most since they went public. The Dublin-based video game studio disclosed that it's in advanced takeover talks with EQT. The deal could value the company above $2.5 billion.
Beijing hinted it could retaliate against the European Union in a trade dispute. It shows signs of following the same path of escalation between the US and China.
Coming up, Iran's President Ibrahim Raisi dies in a helicopter crash. We discuss what's next for Iran and the regime.
And metals move. With gold and copper surging to records, we track the moves. Context matters on Bloomberg. This is Bloomberg Brief. I'm Manish Krani alongside Danny Berger in New York. Now, the Iranian President Ibrahim Raisi and his foreign minister have died in a helicopter crash. State media confirming that the wreckage has been located in the mountains to the northwest region of the country. Joining us now on set is our senior editor. It is Bobby Ghosh. Bobby, thanks for joining us. I mean, you've just returned from Qatar, from the Qatar Economic Forum. Here we are. Iran is the nexus of many policies. Just give us a sense. This is both the leader and the foreign policy leader, Ibrahim, who I met. Foreign policy and domestic policy, where is the greatest impact from this loss?
I don't think there'll be a great deal of change in foreign policy. We have to remind ourselves that the president of Iran is not the most powerful person. He's the second most powerful person. The most powerful person, the person who pulls all the strings that matter, is the supreme leader, Ali Khamenei, who's unelected and who's been there forever and is still there, is 85, is ailing, but still pulls all the strings. So there's unlikely to be any change in foreign policy or anything to do with the outer world. But within Iran, within the establishment of this regime, there will be a lot of churn. Ibrahim Raisi became president in 2021. Very unpopular. It was one of the lowest turnouts historically in Iran. A lot of blood on his hands. In the late 1980s, he was responsible for basically the murder, but let's say execution of thousands upon thousands of political opponents of the regime. Not a popular character, not a lot of charisma, not a lot of credibility. But he was the supreme leader's chosen president. And a lot of people felt that he was very likely to become supreme leader himself when the time came. So there will now be an opportunity for others within the Iranian system to raise their hand, and we have 50 days before there's an election. We'll see who throws their hat into the ring, but there will be a certain amount of domestic churn.
I mean, it comes, 50 years since the revolution. As you mentioned, it's a very aging leadership and a very young population. Yeah. Is there a sense, as this is happening, of fragility within the regime?
Well, this has never happened in Iran. A sitting president has not died. So it's a new situation they face. As with, 50 years is not a very long time for a country. And with a regime like this one that is sort of very, very determined to show that it is stable, that it has continuity. This is a challenge that they have never really faced. So there will be an effort to get everybody to close ranks behind the regime, at least all the regime figures. There will be an effort to try and get some sympathy out of this sudden tragic end to this figure. I don't think it'll go very far. Iranians have shown over and over and over again that they are fed up with this system of government, with the theocratic state itself. There will be some stage-managed events in which people will come out and shed tears. But in private, not a lot of Iranians are going to be shedding tears for Ibrahim Raisi.
No, let's just pivot to Saudi. Obviously, there was a rapprochement between Saudi Arabia and Iran. It's an uncomfortable realignment, one could say. In Saudi Arabia, we understand Mohammed bin Salman, the Crown Prince, has cancelled his trips to Japan as his father, the King, King Salman bin Abdulaziz, is suffering from inflammation. Now, we know that the King has been ill on an ongoing basis. But what is the more important kernel here? Jake Sullivan met with MBS over the weekend. Talk us through the issues of a king who is ailing and a crown prince that's trying to bring a security resolution across the line.
Well, in Saudi Arabia's case, there is no real transition. Salman is crown prince. He has been behaving effectively like the ruler of the kingdom for a long time. His father has been ailing for a long time. King Salman is 88 years old. He has been an invalid for a while now. So I don't expect any real turbulence in the transition there. For all practical purposes, MBS, Mohammed bin Salman, has been running the country. And so all his policies, all the policies of Saudi Arabia are effectively his policies. And he made a sort of deal. It's a little excessive to call it a peace deal, but he certainly made an overture to Iran. And Ibrahim Raisi was the person at the other end of that negotiation. I don't think that will greatly change the calculus now that Raisi is dead, because again, as I say, the person controlling Iran really is the supreme leader, and whoever he appoints will probably continue the policies of his predecessor. So not a lot of change there, I don't think.
Okay, well, you have... It does feel like this moment, Poppy, I mean, it's a lot of tensions, a lot of all-out war, a lot of hot war, and at the same time, you have Israel's war cabinet also in the middle of a dispute, too. You have some people saying, look, Netanyahu, you haven't made an appropriate plan for what happens in Gaza after the war. What does it mean to have this moment of turnover in Iranian leadership, of concerns of health in Saudi, and at the same time a war cabinet in Israel who is starting to diverge on opinion?
Well, it's not good in a region of so much turmoil at the moment. As you say, there's a hot war going on in Gaza. We saw this one coming, didn't we? We saw a growing sense of disillusionment within Netanyahu's cabinet about the absence of a day after plan. And by the way, this is something that the Biden administration has been asking for pretty much from the beginning of Israel's offensive in Gaza. Over and over again, the president, in private and in public, has asked to see some sense of what the Israelis want to do after they have achieved their war aims. And that's not been forthcoming from the Israelis. Now, the fact that senior figures within his war cabinet are openly saying this that's a serious rift. Bibi will probably survive this. There is still a war. Countries tend not to want to change their leadership in the middle of the war. He is a hardliner. He has plenty of support from his right. And overall, in the political landscape, the right is the dominant faction in Israel. Right. So I don't, absent a black swan event, I don't see him being undermined by this. But it's certainly not a good look for Israel in a moment of crisis.
Bobby, wonderful analysis as always. Thank you so much for joining us this morning. That's Bloomberg's Bobby Ghosh. Okay, coming up, we're going to have a look at some of your top headlines this morning here on Bloomberg. It's Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. All right, Manus, let's get to some of our front pages. What's making headlines around the world? I want to start us off with the FT. So they have a story about Taiwan's new president, Lai Ching-te, who's been sworn into office. Of course, there are high tensions in the Taiwan Strait, as it feels that there are everywhere in the world. It also comes as a time of heightened tensions between the U.S. and China. But the new president has called on Beijing to achieve peace and common prosperity.
Yeah, it's certainly a very contentious thing for the world to deal with in terms of chip supply. Next up, let's take a look at the Journal. We both sort of lingered on this. The Fed and two other regulators moving towards the new plan that could add 20% in terms of additional capital to the banks. But of course, the banks really pushed back, led by Jamie Dimon at JP Morgan, saying the proposal was onerous. We now understand that the regulators, they're still negotiating. But if you just look into this story in the Journal, this is Dimon and his reach. I mean, at a conference last year, he said, what person in their ivory tower thinks that it is a rational thing to do in terms of the additional capital? But we also learned how many meetings he had and other bank CEOs had with Fed officials.
This is Jamie Dimon as diplomat just as much as CEO. I think it's also interesting what it means for the bond market. There's been concerns about more volatility because banks can't trade as much because of balance sheet constraints. All right, Manus, let's just leave on this on the Bloomberg. Jeff Bezos' Blue Origin resumed sending tourists to space yesterday. They launched a couple people, 6 people, I believe, yesterday. You know, next they want to go to the moon, Manus. Would you do that?
I go to the moon. I go to the
Bezos?
moon and the stars with you every morning. That's what we do on this show every day. There you go. I'd even pay for a ticket to send you on that.
Really?
Yeah.
you won't buy me a Birkin, but you'll buy me a flight to the moon.
Anything for peace and reconciliation on this show. Next up, Jane Foley from Rabobank joins the team.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Iranian President Ibrahim Raisi and other officials die in a helicopter crash. Intelligence agencies tell the U.S. there's no sign of foul play. Copper roars and gold soars. The metals hit record highs amid haven demand and a short squeeze. And another busy week for investors with a marathon of Fed speak and NVIDIA results as the U.S. earnings season winds down. Danny, good morning. Counting down to NVIDIA.
It is the macro event of the week, because besides that, all you really have are Fed speakers. And let's be honest, they're all saying the same thing. So how much of a macro event really is that? So in the meantime, markets hanging tight, little change on your S&P at just above 5,300. 4 consecutive weeks of gains for stocks. That is the best winning streak since February. 10-year yields, little change, maybe lower by, let's call it a basis point. 4.41 is where we stand so far this morning. They are down 26 basis points so far this month. We ticked a little bit higher to end the day on Friday, but that didn't change the overall trend for the week. Is the anything but bonds narrative coming to an end. Finally, LME copper up more than 2.5%. It is a speculative short squeeze happening on the COMEX. Gold also joining the party. Maybe some haven bid at a record gold is trading at the moment. But Manus, I think really the limits of the gains we're seeing in markets today show the difference between relief and surprise. Last week, the data was one of relief, not of surprise. So you can have a market that is able to rally somewhat. We can get to new highs. Bonds can come in. But the shift you need to see is something that Derek Halpenny was talking to us about. You need a Fed that is really starting a cutting cycle, because in order for them to do that, the other central banks, the ECB, the BOE, they can have their rate differential shrink, and they don't need to worry about their currencies as much.
No, the differential argument from Derek is that it will narrow, and that puts a floor under the euro. You've seen real resilience, which is something that Jane Foley, who's joining us in just a few moments, has said really quite often. I thought it was interesting when it came to the Bank of Japan. You see those JGBs at a 10-year high. We saw that spike at the longer end of the curve last week. So what is the Bank of Japan going to do next? Is it more jawboning along with the Ministry of Finance? But they are under pressure, and Halpenny says 15 basis points of a hike in July, 40 to 50 basis points by the end of the year, and that we're all underpricing the action from the BOJ.
I mean, it's interesting to see the market's excitement, yet they didn't cut bond purchases again on Friday. That's something that folks had expected. It didn't happen. But we do know Ueda, after talking to Kishida, came out with a different tone, a different kind of pivot, saying, look, we do need to worry about FX and its transmission into the economy. That is not what he used to say. And I think that's part of the shift, which Derek noted, that the market hasn't fully come to appreciate.
No, but and it will all be done. I mean, there's a palpable sign of relief probably in the Japanese houses of the Ministry of Finance and the Bank of Japan when they saw that CPI from the US last week, which takes us to what markets are waiting for. A deluge of Fed speak, softer than expected inflation data. Rabobank's Jane Foley weighing in on the potential impact on the dollar and writing this, that while the dollar is likely to lose some support once the market is certain that the Fed rate cuts will come, we expect the downside potential in the greenback is likely to be limited. In short, our view is a broad-based dollar strength could prevail for some time. Contrarian, Jane Foley versus MUFG and Derek Halpenny. Jane, good morning to you. We've got Derek talking about a 4% drop in this dollar. You say that even though that rate-cutting cycle will begin, you see a rise of protectionism as being the alpha restricting the not demise, but the drop in the dollar.
Yeah, I think this is all linked to the rise in protectionism and, of course, the change really in globalization and what that really means for emerging markets, because usually we have the dollar inversely tracks emerging markets really quite well. So when emerging markets do well, then the dollar does poorly, etc. But we've come to this change in geopolitics and this change for capital flows. And, we had the IMF in the spring meeting suggesting that the share of capital flows that the US is getting is far higher. It's gone up to about 33% from about 18% before the pandemic. And of course, you can link that to, Biden's Inflation Reduction Act and to, his want to get manufacturing back home. And of course, that is probably going to be extended if we do get a Trump presidency from November. So we think for dollar flows, much more remaining in the US and a lot less going to emerging markets. And that we think is likely to keep a floor under the dollar. Although, yes, it will lose some ground once the Fed does start to cut interest rates. And yes, emerging markets investments will look more attractive once that starts to happen. But on a relative basis, compared with what models say fair value is for say, euro dollar, I think the dollars can stay overvalued for a while.
Well, again, Jane, it's interesting to listen to the core of what you're saying. You mentioned the Fed there, but it's not the biggest factor. We were talking to Derek, it was about the Fed. To be fair, most people, when they talk about dollar weakness, it is about the Fed, it's about the economic data. So are we overly concentrating on that and trying to divine the dollar's direction?
Yeah, I think you've got to differentiate from the short term and the bigger picture. And I think, the short term, yes, all year, we're totally focused on the Fed and when are they going to go and who's going to go first and when's the second move's going to be. And that is all clearly very, very important. But I think if we take a step back and, we take a look at the flows, look at the outperformance, for instance, of US stock markets. Look at the higher productivity levels that we have in the US. And again, look at the protectionism and the want for Biden to get those flows, get that investment back into the US. So all of these are part of the bigger picture. And I think the Fed, etc., is the shorter term picture. And that will create the volatility on a daily level, on a weekly level, maybe on a monthly level. But overall, the big picture, I think we've got to consider that perhaps potentially a little bit separately.
Well, if the alpha is protectionism in whatever format going into 2025, despite the cuts from the Fed, one piece that really caught our eye was from Dudley, the former New York Fed president, and he said this, and he's talking about a Trump presidency, and the risk is that could Trump take over the Fed? It's a scary thought. It's not an easy single president to undermine the central bank's independence, but the mere attempt to do so could do a lot of damage, can do a lot of damage. So I put it to you, it's one of those out there left tail risks. But how injurious to the very narrative of dollar supremacy could something like that be? Do you talk about that on the floor at the moment? Is that just, they've written another cracking article on Bloomberg, or is it something that you actually talk about on the floor?
Oh, I have talked about it on the floor. I've talked about it with clients, and there's one name that comes to mind when I see these risks or the articles written about the possibility that Trump wants to put his stamp on the Fed and President Erdogan, comes to mind, that the want for lower interest rates. Now, in Trump's mind, he doesn't like a strong dollar, which, of course, has been associated with the US Treasury for decades. He doesn't like a strong dollar. He would rather a weak dollar because he thinks that would boost exports and limit imports. But, of course, just getting interest rates down to weaken the dollar, it's really not that simple. And we can look to a country like Turkey and just, that just that resemblance, really, it just shows what really a mess to the Fed's credibility such a move would take. So I'm of the assumption that whilst we're talking about it, that Republican lawmakers just wouldn't allow that to happen. So it is a risk, but I do think it should be a really small risk.
Yeah, and even in the Trump team, there's been pushback against that very idea that Trump would do that. I mean, it just speaks to how many different advisors and how many different voices Trump has speaking to him. And one of the voices, Jane, we did also learn that potentially Trump, if he were president, would want to push back against any sort of de-dollarization, any idea that people outside of the U.S. want to do trade outside the dollar. Talked about things like export controls, currency manipulations, tariffs for those who try to de-dollarize. Jane, is something like that, one, even feasible, and two, what would the overall market impact be from those type of actions?
Well, I come back to sanctions. So Trump used a lot of sanctions, and it's the use of sanctions that gives other countries, particularly, say, Russia, an incentive to move away from the dollar in the global payment system. There's a lot more sanctions being used now than there were, say, in the 1990s. And if sanctions are used increasingly, then that creates the environment where people want to move away. So the moving away from dollars is happening, will continue to happen. There is an incentive for it to happen, but it's really, really slow. And this is something that perhaps, we could still be talking about, or various other people could still be talking about in, 20, 30 years. It's not going to happen very, very quickly because the dollar is so embedded in the global payment system. It's so used as a invoicing currency. It's going to be so difficult to break away from that for huge amounts of firms and countries.
Well, maybe if Trump takes a swipe at the Fed, that could embolden China to divest even more. 5 consecutive months since the start of 2023, since the start of the year, selling bonds. Very quickly, we just had Derek Halpenny with us, and he's of the view that we're underestimating what's coming from the Bank of Japan. You're going to get a hike in July of 15 basis points, 40 to 50 basis points by the end of the year. What's your view in terms of the hike narrative from the Bank of Japan? Is that what we need, and do we need it in size and scale to stop the rot in the yen?
Well, I think we probably do, but do we have the economic data in Japan to support that? And that's the question. Some of the data that's come out in the last month has been really quite disappointing. So I think the really important one is real earnings. That was disappointing. Hopefully that will start to pick up, because that will give consumers a lot more firepower. They can go out and spend, and that's what Japan is trying to watch. But I'd also say for June, watch the bond buying program. Some people had thought that they would change that in the last policy meeting. They didn't. Perhaps there's a little bit more evidence that they can alter that in June, and that could give the yen a little bit of support.
And we also get CPI data on Thursday as well, so more there to look over for Japan. Jane, thank you so much. Brilliant stuff as always. Jane Foley of Rabobank. Okay, coming up, metals on the move, both gold and copper surging to records. We're going to track those moves for you here on Bloomberg Brief.
It's your Monday version of Bloomberg Brief with me, Menace Crenny, and Danny Berger alongside me. We're tracking the metals market for you this morning. Gold and copper, both hitting records. We've got our mining reporter, it is Martin Ritchie, joining us now. I mean, Jeff Curry must be waking up this morning and just in delirium as this short squeeze takes hold of copper. Talk us through what is actually happening. I mean, we're breaking higher, so take us through what's going on.
Yeah, that's right. Very quickly, copper burst through $11,000 this morning to a new record. Over the past few months, there's been a flood of investor money coming into copper from investment funds looking to buy into this metal, where they see demand rising, supply not rising so much over the next few years. There's just a lot of bullishness about. You mentioned Jeff Curry there. He is a famously bullish observer of the copper market. Said it's the best long trade he's ever seen. But all of this is a strange contrast with what's actually happening in the copper physical market. We've seen some signs of soft demand, particularly in China, where I am. People not so enthusiastic about the market. So the speculators do seem to be betting on copper prices, copper demand, and the market being tight over the next 12 months rather than right now.
We can't forget gold either, Martin. Quite a run as well, continuing to hit another record. I mean, the thing keeps moving and moving just when you think that the gold trade is exhausted. Does the macro narrative of one that we're looking at now, where cuts are looking better, the data is weaker, do we need to continue to see that to see a trend of still gold buying?
Look, I'd point out three different things for gold. Just a very immediate thing today, the death in the plane crash, helicopter crash, sorry, of the Iranian president and foreign minister. Obviously, gold always has a kind of knee-jerk reaction to geopolitical risk and uncertainties. That's one thing. Secondly, as you mentioned, we've seen the kind of euphoria in bond markets over the past week. We've seen people expecting perhaps the Fed to cut rates sooner rather than later again, and that's helpful for gold as always. But then thirdly, and this is a more sort of undertow in the gold market, is about central bank buying, which has been a constant over the past 12 months. And when we see, you had this in a previous conversation, I think you're talking about sanctions. When we see, for example, China and US trade tensions getting worse, that's also an environment, I think, where people start to think about de-dollarization whenever there's talk of more trade disruptions, more sanctions.
Yeah, absolutely. We see that with now foreign central banks dumping treasuries. China did the most on record in the first quarter. Hey, Martin, thank you so much for that. Martin Ritchie on the metals. Okay, let's get you a quick check on Ryanair shares because they are falling this morning, down to less than 1%, but down nonetheless today. The airline announced that ticket prices in the summer may be flat to modestly higher, but they did also say that demand is higher despite the low capacity. Bloomberg spoke to the CFO of Ryanair, Neil Sorahan, earlier this morning.
Boeing and Airbus are running behind on deliveries and will likely continue to do so out into the 2030s. So, you know, one would anticipate that pricing would maybe be a bit ahead of where it is at the moment. That said, you know, we're going to grow by traffic by 9% this year to almost 200 million passengers. And we're guiding fares in the peak summer months flat to modestly up. And that's on top of a 21% fare increase last year. But at the moment, we are having to stimulate midweek traffic a bit more than we would have anticipated. Weekends, very strong. But I'd anticipate that, you know, with the schools closing in the next few weeks, that we'll start to see the midweeks close out as well. But we're taking in over 600,000 bookings a night. So demand is huge. And my advice would be to yourself, Tom, and everybody else, book sooner rather than later, because I think fares are only going to go in one direction.
But for a bit more detail on that, Neil, then, and we'll take that advice on board. Where do you see more positive price pressure coming through for you in the business in the quarters ahead? When does that become more substantial?
Well, I mean, the peak months for us are the July, August, September, and they're booking well at the moment, albeit that we'd only have, you know, over 30% of those bookings in place at this point in time, which is not unusual for the time of year. But we would anticipate that they'll be very strong into the summer. So that's why we're saying fares flat to modestly up into the peak summer months.
OK, so you're booking, what, just above 30% for the summer season so far for Ryanair. I think we were speaking to EasyJet last week. They said about 39% for the summer season. Neil, in terms of the deliveries, there's another line crossing from the earnings story then around Ryanair saying there's a risk, you've said, and you and the team, there's a risk that there's further slowdown in deliveries of those Boeing 737 MAX aircraft. Can you give us a bit more detail on that? We'd heard that you had maybe 2 or 3 that could be delivered by June. Is that still on track?
Yeah, as things stand, we would hope to have 158, maybe if we're lucky, 160, 161 game changers in the fleet by the end of July. That's roughly 23 aircraft shy of where we had hoped to be at that point in time. But we're very pleased with how things are going with Boeing at the moment. The new management team, led by Stephanie Pope in Seattle, are producing higher quality aircraft, and the consistency of deliveries is getting better. So, you know, I'd be hopeful that we'll be closer to 160 aircraft by the end of July, and then, you know, we'll hopefully catch up the shortfall of 20 aircraft by November timeframe, which means there's only 29 aircraft left in our 210 aircraft order for the game changers, and they'll come in ahead of summer of 2025, and then hopefully by 27 we start taking delivery of the first of our 300 aircraft order for the MAX 10s.
That was the Ryanair CFO speaking to the team a little bit earlier on, Neil Sorahan. Joining us now is Sid Phillips. Sid, good to see you. I mean, we listened to Neil. We'll catch up with Michael a little bit later on, the CEO. If we look at these earnings and you look at this under delivery of planes, this is about a natural shortage versus vibrant demand. How does the summer look as you take away these first read from Ryanair?
Morning, Manus. So Ryanair is obviously the bellwether for European travel demand. And essentially, when they're sort of hinting that pricing may be modest this summer, it shows that there is maybe some resistance from consumers to sort of that revenge travel where people are willing to pay anything really for a flight to the beach this summer. And so I think that sort of people are being a little more cautious about booking, and airlines will have to start to discount fares as well as sort of stimulate demand and make sure people actually book those flights, because summer is when all the European airlines really make their money. And so they're going to have to fill up those planes, and they're going to do whatever it takes to fill those planes up.
And as Manus says, you can fill up as many planes as you want, but if you don't have the planes, it's a problem. Sorahan talked about potentially less deliveries from Boeing. We just had Boeing's annual meeting, Sid, on Friday. We talked about this last week, the anticipation for it. They still don't have leadership in place, future leadership, after Dave Calhoun leaves. What does it mean for Ryanair to continue to have this turbulence and really no end in sight? Again, when we just don't even know who the leadership is going to be come early next year.
Yeah, that's a really important question. And I mean, Ryanair centered its fleet around the 737 MAX. And so they obviously have a lot of delays. There's a lot of delays in getting new aircraft in. And that's really contributing to them not being able to offer as much capacity as they'd like to be able to, and to be able to sort of compete in the market. And so there is a sort of disconnect there with Boeing, and Boeing is obviously the biggest sort of obstacle at the moment in terms of capacity for them. And for the broader industry as well, because, I mean, the industry at the moment is struggling to get as many airplanes as they can. I mean, we just saw a deal in Saudi Arabia where they ordered 105 new Airbus planes. And that, again, they said they would have liked to order more planes, but they couldn't because there weren't any airplanes available. So I think that's really the key question. How do airlines actually get brand new planes and get them flying?
Sid, appreciate it. That is Bloomberg's Sid Phillip. And tune in, as Manus mentioned, we're going to have an interview with the Ryanair CEO, Michael O'Leary, around 8:15 a.m. Eastern. Okay, coming up, we're going to set you up for your trading week. We got some Fed speakers, and a tech company might be reporting, one that you might have heard of. That's coming up. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Okay, let's get you set up for your trading week. We're going to get more Fed speak. Raphael Bostic and the Fed Vice Chair for Supervision, Michael Barr, will be speaking throughout the week. Will they say anything different? Perhaps unlikely. On Wednesday, NVIDIA is going to be reporting its results. Let's be honest, that's the big event. The Fed minutes will also be given. G7 finance ministers and central bankers also gather in Italy to discuss the global economy. Manus, that starts on Thursday.
Yeah, we're setting up for a lot of differential in rate decisions across the world. Some micro movers for you. You've got Johnson Controls, activist investor Elliott is in there, taking a stake over $1 billion. Micron has been upgraded to equal weight from underweight at Morgan Stanley on the strength of the AI capability. And JP Morgan rising on Wall Street Journal reports that the Fed and two other regulators are moving towards a plan that could lower the capital requirements by 20%. We got there.